There's so much emotionally charged hype out there designed to sell newspapers and advertising rather than inform investors and traders. Want entertainment? Buy a newspaper or magazine or turn on the news. Want investment and trading concepts explained? Look to TechniTrader. TechniTrader is the gold standard in trading and investing education taught by experienced and accredited professionals. Don't learn to trade from fad-chasing day traders, and certainly don't think you can grow your portfolio by attending a weekend seminar or watching a free video online. Success in the financial markets is attainable, but like any high-paying profession, it requires the proper education to achieve consistent success. Join those happy few who've taken their investing and trading seriously. Call 888-846-5577 or visit technitrader.com.
Hi everyone, today's radio show is about your capital base, how much you need, whether you should be trading stocks or if you should be trading stock options or other derivatives of the stock market. There are many different derivatives that you can trade on the stock market. Some are traded on the stock exchange. Others are traded on entirely different financial markets. There are several different financial markets that are out there. There's the commodities markets, completely separate from the stock market. There's the futures market, where they buy and sell futures, and these can be single stock futures, index futures, E-minis, that type of thing. They trade off of the stock market. They're part of a different financial market. There's the currency market, known as Forex, and that's a big topic all unto itself. So there are many different financial markets that you can invest in. There are many different types of instruments that you can invest in to increase your capital base and prepare for retirement or paying for your child's college or your college, a house or whatever. Investing is a way that you can increase the amount of money you have available to do things from big ticket purchases to just making sure that your family and you are financially secure. It is impossible just by earning a wage or a salary, unless you're a Fortune 500 CEO or something like that. It is impossible to just have financial security simply by wages or salary. You also need to invest that money, or if you need extra income, trade the stock market, other financial markets. So there's two things that you work with here. You work with investing to increase your financial self-worth, or you trade for extra income as a part-time job or a full-time job. So today we're going to be talking about capital resources, how much you need, stocks versus options, that type of thing. I was speaking with a woman, and she was very concerned because she realized that she was wanting to trade options and she didn't know a lot about it, and they were talking about condors and spreads and strangles and all these exotic options trades, and I was saying, well, most of these, of the 70 plus option strategies are actually designed and were developed for market makers. They weren't designed for retail traders. And she was very interested in this, and she was very interested in our courses, but she was very concerned because she'd already spent a lot of money and a lot of time learning, and she thought, oh my gosh, all this time and money that I've spent on this education isn't what I need, and so it's all worthless. And I said, no, it's not. It's all useful. Everything you learn is useful. And what we do is we fill in the holes. And that's what I told her. I said, we fill in the holes. There's giant holes in your education. You don't even know. You've started to realize some of those today. But everything you've learned is going to be used. Everything is useful. Just because you learn something and you discover it's not right doesn't mean there isn't a use for that. So don't go thinking that when you become a TechniTrader student that you have to throw everything else you've learned away. That's not true. What we do is we fill in the holes. We give you the education that you can't find anywhere else. It's not on the internet. It's not available anywhere else. And it gives you the understanding of what's going on rather than just a strategy or how to use an indicator. We take everything and we put it all together in a complete process. And that's what makes our students so successful. Now, options, one of the things that this lady and I were talking about is she was shocked because she thought that when you traded options, you had limited risk. This is a common misperception. When people first begin thinking about trading options, a lot of times, a lot of option scams or individuals who are teaching options who really are not professionals but claim to be, or individuals who are just trying to make some extra money with some teaching devices and they really are not credentialed, will tell you, oh, there's limited risk when you're trading options. The most you can lose, they say, in your option is that it expires worthless. Well, that's a 100% loss on your investment or your trade. That's a total loss. There's no limit there. And no, some of the strategies that have 3 legs or 4 legs are very complex. And can you lose money on them? Yes, you can lose a great deal. So that's a misperception that people don't understand. And the argument that they give is, well, a stock could go to zero. That's extraordinarily rare. Stocks usually during a correction, which is an intermediate or short-term correction, a short-term correction lasts anywhere from a few weeks to a few months. They'll lose 10 to 20%. In an intermediate term correction, stocks can lose anywhere from 20 to maybe 30 or 40%. In a bear market, they often lose 50% or somewhat more. But the stock market has never gone to zero. Never. Even during the Great Depression, when it lost the greatest amount of all time, it lost 82%. Now that's a huge loss, but it is not zero. Stocks do not go to zero. They fall to the level where fundamentals make sense again to the price value of the stock. They stop there because the dark pools will be buying them at bargain prices like they did in 2009. March 2009, dark pools started buying stocks and they bought them at bargain prices because they were below the fundamental values of the company, because people panicked and started selling stocks because the real estate boom crashed and everybody was sure that the world was coming to an end. So let's compare this. Let's say that we have an intermediate term correction in a few months and you lose 30 or 40% of the value of your stocks that you're holding. Okay? That's not zero. You've made a loss. There's no doubt about it. And that's what we teach you to avoid, is not living through those, because it's totally painful and you would lose some of your capital resources. If you were trading an option and the option expired worthless, that means you lose 100% of your capital you invested in that option. It's gone. So this myth that persists that options are less risk than stocks is not true. If you make a mistake with your option and it expires worthless and you're not able to sell it, or you hold on to it and it expires worthless, you've lost it all. If you make a mistake buying a stock and it's a good solid company and it's just going through a business cycle, you can hold through that correction and that stock price will return or get close to the value that you originally had. You do not have 100% loss. When you're going to trade options, you can't just focus on the options market. A lot of people think that the options, and that was another misnomer that I found. A lot of people thought that options actually change the stock value. That's not true. It's the other way around. This is the mantra you should keep in your head. The option will always follow the stock price. Now, the stock may go up 3 points, but the option contract may only go up 1 point. There is a bit of a spread between the stock price going up, the number of points it will go up or down, and the value of that option. And that has to do with time decay, intrinsic value, and so on and so forth. So you will never make as much money, as many points on your option as you will if you had purchased the stock. The reason that a lot of people like to trade options is because a lot of people don't have $100,000 or $10,000 to trade. They may only have $1,000. They may only have $2,000 or $3,000. They may only have $500. This is a word of advice. The lower your capital base, the less money you have to trade or invest, the more careful you must be. The sad thing is usually people who have less than $5,000 or $500 or $1,000 to trade or invest usually get into a gambling mode. They take high risks. They rush without thinking. They don't ask enough questions. They impulse buy, and then they lose it all. And then they're angry at the stock market or the options market for cheating them. It is your responsibility to do due diligence. The U.S. stock exchange and options markets are the most highly regulated markets in the world, and they are the safest. But that doesn't mean you can just rush out and do something because you get all excited. There is never a reason, and there is never a time when you should feel an urgency to buy right away. There's always ample time, and there are thousands of stocks to buy and tens of thousands of options. So if you feel an urgency or a need or a rush, then you need to stop, especially if you have a low capital base, because all that's happening is somebody is creating an emotional urge for you to buy something that you haven't fully studied and checked out. Just because somebody says some stock is a great buy doesn't mean it is. And it doesn't mean that it's good for you. There's risk factors that you have to consider, especially if you have a lower capital base. Options allow you to leverage into a stock. You can either exercise the option and take possession of the stock, or what most people with low capital bases do is they trade that option. They buy an option, and then they sell it later on after the option value has gone up. And that's how they make a little bit of money. But options trades always have limited profit potential. They will never go up and up and up like a stock. You could get into a stock and you could hold it for several weeks to several months, and that stock might gain 50 points, 20 points. It could go up a lot and make you a very tidy profit. An option cannot do that because there's a limited time factor, and it goes up far less. Its value increases much more slowly than the stock. Now, granted, there are times when they come closer, but that's an important thing to remember, is that it will always be a certain amount of time decay involved, and so you have a limited time for that stock to move. So if the option contract will always follow the stock, doesn't it make sense that what you should really be looking at is the stock, how far it can move in a set amount of time, calculating that versus the risk factor of the option length of time that the option contract will be valid before it expires. Those are things that options traders that are brand new never consider. You want to be studying the stock first, not the option Greeks. Their numbers, and everybody touts those as all important, but frankly, they're not very important at all anymore. It used to be in the old days that they had no way of determining the value or the price of the option contract. So they built in all these different variables based on the Black-Scholes theory. The theory has been proven unequivocally to fail, especially in stocks that are not highly volatile. They actually deviate over time greatly from that theory. So that theory is false, and yet all retail traders still cling to this horrible model, this horrible theory, thinking that that's what they should use because that's what they read in books and that's what the options gurus tell them to do, instead of realizing that sometimes something has been a theory and it isn't true. We find this in physics and science all the time. So a theory or a model is a guideline, but it can be wrong and it can fail. And that's something that all retail traders need to accept. Random walk is a total fallacy. If random walk and prices didn't have any common sense to them at all, there'd be no trends, there'd be no trend line patterns, there'd be no reason for stock charts because the price would be all over the place. It isn't a random walk. The theory is flawed. Throw it away because it doesn't work. You need to use things that make sense and have concrete evidence that they work. And a lot of times what new retail traders do is they rush and they read this stuff that's 50, 60 years old, my goodness, and they think that it works in today's modern market structure, and it doesn't. The market has changed more in the last decade than it did in the prior 120 years. Think about that. So if you're using theories that were written in the 70s and 80s, are they still valid? No. Technical analysis has changed dramatically in the last few years. It's not the same as it was. Even candlestick patterns are extremely different than what is represented in the Japanese candlestick books. You can learn those, and that's a fantastic place to start. But if that's as far as you go, you're not going to be ready to trade the market. Now back to options. Options can be something that can really help people get started in investing or trading. But you really have to understand a great deal more than you think you do. Everybody promotes strategies and, if you do this, then there's no way you can take a loss. That's a lie. What a lot of the multi-leg strategies require is that the stock actually moves, or it doesn't move at all. Well, there's no such thing as a stock not moving. It's going to move up or down at some point, even a little bit, and that's going to affect the options that has multiple legs. If it doesn't move and the strategy requires that it moves either up or down, and so you buy a call and you buy a put, and so it doesn't matter what the direction of the breakout is, it will make you some money. What if it doesn't? Then you lose. So a lot of times the risk factors aren't expressed to new options traders as well as they should be. And one of the things I really wanted to stress today is that when you buy an option contract, it can expire worthless. And when it does, you have a 100% loss. There's no such thing as you have limited risk. Yes, you're investing less money than if you were to buy the stock itself outright. There's less money at risk. There's less money in the market at risk. But that doesn't lower your risk buying the option contract because you can lose all of it. And if you only have $1,000 to invest or trade, and you spend $420 on an option contract that ultimately expires worthless, or you take a small loss on if you try to sell it, you have lost that money. And that's almost half of your capital base. So options are not necessarily safer. And with options, you have to learn not only the options market, you also have to understand stocks. So the best way to start learning options is to start by learning about stocks. When you understand stocks, how it works, how to buy it, and everything, then you can apply the options as a means of being able to enter with a lower amount of money. And if you do it that way, you will be very successful. If you start trading options without understanding the underlying security, the stock, and how it's going to move and whether there's enough point gain potential in the limited time that you have for that stock to move up with the option contract, you're going to lose. And I can assure you that 90% of the new people who start trading options lose money. And they're usually people who don't have very large capital bases, and they really can't afford to lose that money. And they become very disillusioned and very angry because they've lost that money. So do yourself a favor if you want to learn to trade options or are starting to trade options, and you want to understand that you have to start with the stock, because if you don't understand how the stock is going to move, how long it's going to take to run, and how far it can go, and how many points potential gain versus the risk factors of the stock or the option, you are already starting with a losing proposition. Now, I know that a lot of you are really eager to start trading options and you're all gung-ho, but you should be always very reticent about going into something where they are trying to push you in and you've got to do it. No, you don't. You don't have to do it right now. You don't. There's always opportunities in the market no matter what is happening, and there should be never a reason where you feel that you have to impulse buy anything. Options take more work because you have to understand the stock and the options and how they work. And there are a variety of ways to do it. But what happens is most new options traders start with strategies. That's the last thing you need to learn. The most profitable options traders I've ever met use simple calls and simple puts, and that's it. They never get into the exotic strategies because you don't need them. If you know and have studied the stock chart and you know the breakout direction, which is something that all of you should learn to do because the market trends sideways 60 to 70% of the time. So if you can't read a chart and tell what direction it's going to break out, then that's a big hole in your education and you need to learn how to do that. A lot of option strategies assume that you can't figure out how to do it because they're trying to promote the option strategy rather than teaching you how to study a stock that's moving sideways and determine which direction it's going to break out. It's not that hard. It just takes a proper education such as we teach at TechniTrader. So if you're interested in options, check us out and check us on our website and make sure that you start with a good education on stocks and then move into options. About the other financial markets, commodities, futures, currencies are all much harder to trade than the stock market. If you're interested in trading commodities and futures, E-minis, currencies, that type of thing, there are derivatives that you can use that are traded on the stock exchange, and that's a good place to start. The simplest, easiest, and most profitable financial instrument of all has always been and will always be the stocks. Bonds are a debt instrument, and at times they do well, but they are not as lucrative as stocks. When you're an option trader, you have to be aware of many variables, but the most important thing to always remember is the option contract will follow the stock, but it will not be point for point most of the time. This is because the option depends on the stock in order to make the profit, not the other way around. So studying the option market first is a big mistake. The stock leads the option, and the option follows in value, and that is something very important. If the option contract was worth more than the stock and the price was moving up, that would be an arbitrage situation, and the market makers would immediately jump on that, and the arbitrage would be gone. There are no arbitrage situations for retail traders or retail investors. Market makers, high-frequency traders, all wipe those out within milliseconds if they ever occur, and they do not occur on our markets very often anymore. Option trading can be a very fun, enjoyable, and profitable way to make money through stocks. Options are a derivative of the stock market, so you have to understand the stock market before you can trade options. A lot of times people start with options and they have no clue what the stock is doing, and that's why they lose money. Options are an opportunity, but also there is risk. And the risk is that that option contract will expire worthless and your loss will be 100%. That doesn't happen in stocks. Stocks certainly can correct, but they never go to zero unless the company goes bankrupt. There has never been a bear market where the stock market has collapsed to zero. Never. That is because the stocks are based on the foundation of businesses, and those publicly traded businesses have a value, and that value will be met long before it goes to zero unless the company is bankrupt and going out of business. But anyone would know that long before the stock would drop to zero. So there is a huge difference, and there's a lot of misinformation about options out there and how low the risk is. There is risk involved. It may be something that's right for you. It may not be right for you. That's something that we like to do when we talk to people about our stock courses, is to discuss with them what would be absolutely right for them based on their capital base, how much experience they have, their risk tolerance, so on and so forth. So instead of just talking to you about, oh, a great and wonderful course, or, oh, you can make a lot of money day trading, or you can make a lot of money option trading, we sit down and we talk to you about what you want to do. Do you have a limited capital base? We don't need to know what it is, but is it limited, or do you have enough that you could do something? We can give you some guidelines. We ask you how much experience you have. What have you had as far as education? Where do you feel your holes are? Do you know what's missing? How great is your success? We talk to you about it, just like a college counselor would talk to somebody who was going to college to make sure that they would get the right curriculum. And that's what our goal is, to get you the right curriculum. Most of you have a little bit of education, and that's awesome. But you're losing money because you have huge holes in your education. And you may not even know what those holes are. Our job is to find out what those holes are and offer you the right courses to fill the gaps in your education so that you can be consistently successful trading or investing stocks or options. And the key word is consistency. People will have one great trade and they get all excited, and so they keep trading and they lose money, and they keep trading and losing money. They say, well, I made that one good trade. Then they'll suddenly have one good trade again, and then they'll lose more and lose more and lose more and lose more, and then they'll have another good trade. So it's like holding candy out in front of you, and it's just this lure that you can do this. And meanwhile, your capital base is eroding, and so is your confidence. And that's the worst thing that can happen to anybody, is when you start to lose your confidence and your capital base, then you have even higher losses. So get a decent education. Get something that's going to help you and have the entire process that you need and fill all the holes in your education that you have right now. I'm Martha Stokes, and that's our radio show for this week.
There's so much emotionally charged hype out there designed to sell newspapers and advertising rather than inform investors and traders. Want entertainment? Buy a newspaper or magazine or turn on the news. Want investment and trading concepts explained? Look to TechniTrader. TechniTrader is the gold standard in trading and investing education taught by experienced and accredited professionals. Don't learn to trade from fad-chasing day traders, and certainly don't think you can grow your portfolio by attending a weekend seminar or watching a free video online. Success in the financial markets is attainable, but like any high-paying profession, it requires the proper education to achieve consistent success. Join those happy few who've taken their investing and trading seriously. Call 888-846-5577 or visit technitrader.com.